Welcome back to HBAR DeFi Corner, where we get into all things Hedera DeFi. One thing I want to say before we get started is none of this is financial advice. Make sure you understand the risks getting involved with DeFi and also understand your local laws and regulations before you get involved. But with all that out of the way, Brady, things have been heating up in several different areas in Hedera DeFi. Welcome back.
Yeah, thanks so much for having me.
Yeah, looking forward to diving into this stuff. Why don't we start off just getting into some of the news and events around Hedera DeFi?
So, Idera Foundation had some great announcements recently, particularly around RWAs. So, it looks like the onboarding of Swarm Markets and KAIO. Swarm Markets is an RWA tokenization platform for equities. They've been available on a couple networks already, and so bringing that availability to Hedera. It's tokenization of stocks like Tesla, Apple, Nvidia, some of these more like I think high volume stocks that actually they kind of mirror the stocks that you see on Robinhood that are doing 24-hour trading capabilities. And we already see platforms like that on networks like Solana, for example. They use a different company called X Stocks, but seeing kind of the proliferation of those tokenized equities available in their DeFi ecosystems on trading venues like Jupiter and on Camino, which is like a lending and borrowing platform. So I think it's a big advancement with regards to Hedera and its move towards RWAs. It's going to be, tokenized equities that I think also end up in RWA XYZ when that platform does like officially go live with the Hedera network's total RWA count and valuation. And then with KAIO, my understanding for them is it's a digital assets arm that is at least partially owned by Nomura and very similar in nature. Again, RWAs and their availability on the Hedera network.
Yeah, I'm still trying to parse out what's what. I know that Laser Digital, which is involved, that is supported by Nomura. It's great to see Hedera Council members getting more involved with stuff like that. Brady, one thing that I saw in that press release is it said that these assets are going to be DeFi ready. Do you have any idea if they're talking about having their own DeFi platform or if this stuff's going to find its way onto SaucerSwap and things like that?
So I can speak specifically to Swarm Markets, and then to your point, haven't dug deep enough with regards to KAIO. For Swarm, the way that they're working on, on these other networks and within these ecosystems, the assets are permissionless in nature. They can be made available in existing DeFi protocols that, for example, are based on Uniswap, like SaucerSwap is, or Bonzo that are based on that's based on Aave. So there's a permissionless aspect to the assets, which is great. And then it is up to I think the venue to make a determination, the protocol to make a determination as to the sort of regulation legalities, other things around whether support for those assets is something that they're able to do, or maybe it's a jurisdiction based thing, or maybe they're more comfortable with like some degree of KYC. In the way that there's no clear cut regulation around this, is my understanding, as with most things in DeFi. But the redemption aspect of it, I think, is the part where that may be the sort of solidified KYC thing. So if you're finding yourself out in DeFi and have retention over the asset in a wallet, being able to then redeem it for the actual stock, they would go to the Swarm platform. And as someone who is KYC'd, be able to have like a redemption mechanism to be able to actually take custody of the underlying asset itself.
Makes perfect sense. I mean, this gets my wheels turning on a few different fronts. Number one, the regulatory front, SEC coming out with Project Crypto. You'd have to imagine that there's going to be some positive things along these lines. But the other thing is, I was thinking about the progression for these traditional assets of, traditional exchanges starting to offer these kind of assets. So we think of the Kenyan Digital Exchange, which is going to come from another one of the Hedera Governing Council members, the Nairobi Securities Exchange. And then I was thinking of that, of course, acting as a proof of concept for the NASDAQ and the FTSE and all the other big exchanges out there. But this could kind of allow the disruptors to be the ones offering all of these assets. So it could actually be SaucerSwap instead of moving up their traditional side. It could be SaucerSwap offering these assets, and they could become a competitor to some of those traditional exchanges.
Yeah, no doubt. And then with a lot of these exchanges potentially having like more simplified applications and financial services that mimic maybe some of the banking or like equities trading apps that we have today, like Robinhood or Wealthfront. Starting to see the evolution of some DeFi protocols break into that. I could totally see that. Uniswap's app is doing that today, and then we know SaucerSwap's coming out with like more front end type applications. So it definitely see it as part of the evolution of all this. And then also it's probably more of a personal opinion how I could potentially see things evolving, but I think they'll end up being sort of like a garden that you can sort of once you're in, then you're in and you can move around and play within DeFi the way that you would today. But in those entry points to get in, it's some form of KYC. And this is probably like 10 years down the line, maybe even later than that. But I could definitely see sort of like a walled garden DeFi where once you're in, you're in. You still have the flexibility, you still have the ability to move around in what would feel like a more permissionless nature. And then anything outside of that is maybe dark DeFi. So, I'd imagine just in the same way that we have like the dark web and the light web, there might be sort of the existence of these two sort of financial systems that are probably pretty hard to pass through. But just thoughts on sort of like what maybe a long-term timeline might look like.
Yeah, and of course we can tie the KYCs directly to the accounts. So I mean, it's a natural progression for sure. The
Yep.
last thing on this that I'm kind of curious about, and of course it's right up your alley, is you would think things besides like treasuries and USDC and things like that. This would be perfect collateral for something like Bonzo for lending and borrowing, right?
So when you look at the rest of the space and sort of how some of these protocols are evolving with regards to the usage of RWAs for permissionless DeFi lending, again pointing back to Camino and Xdocs, that's exactly right. They're only able to be used as collateral, and then the collateral can be used to borrow like USDC against the asset. But what it does look like is that the asset isn't able to be borrowed itself once a pool is substantiated. And then, the question becomes sort of, well, what about liquidations as part of that? And in the research that I've done and understanding is that you would have liquidation bot operators that still exist, but then those bot operators where there's the propensity to be able to take custody of some of these assets, if there is a liquidation, they would end up being like KYB, probably through Swarm. And so you would have to have sort of a somewhat permission setup from that perspective, but it does open up the door to the potential for some of these things. And this is the first sort of phase of it, just sort of bringing this capability online for the Hedera network and the ecosystem, and then it is up to protocols, like Bonzo, like SaucerSwap, and others to have to go figure out, hey, what is this? What is the path to implementation then? What are we actually able to do based on jurisdictions that these protocols are based in? Things of that nature.
Sure, makes perfect sense. Now, of course, DeFi Corner wouldn't be possible, and actually, Hedera DeFi at this point in this phase wouldn't be possible without Bonzo Finance and SaucerSwap. And you guys both have some news that's going on right now. What do we have there?
Yeah, so from Bonzo Finance's perspective, there's a process that has been implemented that is inclusive of change memos and an independent risk steward for the Bonzo ecosystem related to the adjustments of parameters within the protocol. So we did see a liquidation that took place that was pretty large. It was for the Bonzo governance token asset market early this month. And it was, likely a reflection of, the adoption and the amount of liquidity that was received by the protocol pretty quickly over this past, 6 months to a year. What it calls for is more, I think, maturation of the protocol on some of the operational side of things related to DAO governance and laying a foundation for the DAO going live by the end of this year or very early next year. And what a change memo is effectively a DAO proposal format that allows an independent risk steward to come online and act as, again, an independent party that runs analysis on risk related to not just the protocol and its asset markets, but also the broader ecosystem. So, like secondary liquidity sources of the supported assets in the protocol, as well as concentrations of that liquidity. So secondary liquidity being SaucerSwap, really, because of the sort of primary, that being the primary DEX on the network. They submit change proposals that are co-authored and authored by them, and then those are implemented. But what it does is create a better process and transparency for users around some of these changes that are really important to their usage of the protocol any strategies that they might be using. When you start to adjust those, it's going to change the way that they are able to use the protocol. And so, with this recent event and quickly bringing online and onboarding this risk steward, this change memo process has been implemented, and these change memos themselves are available in the documentation on Bonzo Finance, and then also within the notification center at the top of the dashboard, and in Discord, a dedicated channel related to that. And so those memos dive into justification for why certain parameters need to change. Things like supply and borrow caps for each of these markets, the loan to value ratios for the markets as well, liquidation thresholds, and then in particular, interest rates around the USDC market, which is arguably the most important market for a lending protocol is stablecoins. And so the combination of memos that came out and the subsequent changes that took place were about trying to ensure safety of users, the protocol, the broader ecosystem, and at the same time maximize the market efficiency of stablecoins in the protocol. So being able to lift some of the parameters on the USDC market. As you probably saw before, there's a pretty low cap on the borrow amounts for USDC. And then that the one of the figures of optimal utilization, or effectively the point at which in the pool where once it hits a certain level of utilization, the rates start to dramatically increase. And so that was shifted more close to a comparable optimal utilization that you see in some of the other lending markets across the rest of the Web3 space, like Aave and Compound. So from about 52% optimal utilization to 85% optimal utilization.
Well, overall, I mean, from that whole, we'll call it a flash crash, everything worked the way it was supposed to. Yes, it can be a harrowing experience to watch an asset drop like that. But of course, I know you guys stepped in. I think that makes perfect sense. If you see your own token and you believe it's undervalued, you should be able to get in it and get involved with that. Same thing on the other side. If it gets overvalued, from your opinion, you should be able to take some of that off the table. But if that kind of stuff happened in traditional markets, stuff would break, right? There would be circuit breakers going off and everything else. It just shows how robust the DeFi ethos is, right? The ability to go through a liquidation like that and then be able to recover all within the span of a few hours, and everything works the way it's supposed to. I think it's a testament to DeFi in general.
Yeah, I think that was the most important part of it, is sort of the protocol operating in the way that it was supposed to. When you look at sort of that event that took place, liquidation bots came in and performed liquidations in an efficient way. Yes, it was maybe a high volume of liquidations that took place, but that was expected, I think, given the volatile nature of that event. And so I think one of the things that moving forward is going to be helpful is this change memo process, this independent risk steward, and trying to sort of, them bringing these parameters in a little bit more for users to still have the flexibility that they need to be able to use the protocol in the ways that they want, sort of independently on their own, take on some level of risk based on their own assessments. But at the same time, the parameters being set in such a way that it doesn't impact others, or the impact that could happen due to maybe one individual or a small group of individuals being muted or mitigated in a way that's less impactful to others.
And I mean, this was forced selling, towards the bottom for some people. One of the point I'm trying to make is it also reminds us of some of the risks that are involved. And it's always good to get those reminders when you are lending and borrowing using these platforms. It's critical for a DeFi ecosystem, but there are those risks involved. So, Brady, do you have anything else you want to say on that, or are you ready to move on to SaucerSwap?
Ready to move on to SaucerSwap. Well, I'll say one thing. There's also, I think, more education in regards to the parameters that exist within the protocol. It's pretty complex, and there's a lot of like interdependencies that exist between the various markets that exist on the protocol. There was another educational video that was done with, I think it's a Crypto School is the X handle, and they've been doing a bunch of educational videos across the DeFi ecosystem for Hedera and even on other networks. We dive in there to some of the specifics around each of those parameters and kind of what they do and they are, and their relation to the other parameters in the protocol. Again, sort of that interdependency across all of them.
Absolutely. All right, so let's get into SaucerSwap.
Awesome. So SaucerSwap recent announcement was with regards to a foundation grant they received, continued operations, it looks like, for another 12 plus month or so. And then a roadmap update that kind of dives into the specifics of their ongoing roadmap for the next year. So, when you look at that, SaucerSwap Mobile, we talked about their application that's coming online. That's in Q3 2025. Integration for bridging with Axelar and Layer Zero in Q4 2025. Limit orders and stop loss orders and dollar cost averaging in Q4 2025. Looks like perpetual futures in 2026 and then SaucerSwap V3 in 2026. I'm really curious to see what V3 ends up looking like. I do wonder, I don't know the open source licensing for Uniswap V4 with hooks, but maybe Uniswap V3 is a take on Uniswap V3, V4 where we're going to see like greater degrees of programmability. But yeah, we'll have to wait and see.
Yeah, looking forward to it. The more tools we get, the better. Of course, SaucerSwap is the big kid on the block right now when it comes to Hedera DeFi, especially as exchanges go. But I've heard there's some grumblings that there might be some other ones that are in the works as well. So now we're going to shift gears here a little bit from normal DeFi into another part of the HBAR economy, and that's NFTs. And we've seen a lot of movement there. Before I dive into it too much, Brady, what's your take on what we're seeing in the NFT space?
So in particular, what we're going to be talking about is Dead Pixels Ghost Club.
Yeah.
And they've been sort of a staple project that has existed in the Hedera NFT ecosystem for a while now. In conjunction with that, Centex has been one of the leading marketplaces for NFTs. There's also Kabila markets as well for NFTs that are definitely notable and up there in terms of marketplaces. The biggest thing that I posted a lot about this actually and joined some of their spaces as soon as they made the announcement for a specific mechanism that they have called Forever Mints.
Hmm.
And Dead Pixels Ghost Club has this unique sort of economic and community utility mechanism of Forever Mints whereby they use the fees generated from the purchase, the royalties of the purchasing of NFTs to be able to purchase their own NFT on secondary as, what some would define as like a buyback, and then package up the NFT that's purchased on secondary to be made available as a random number generator pack that you can purchase for a fee. And you don't know what NFT you're going to get as part of this. So it could be one that, is highly prized, maybe more rare than another, or it could be sort of more of a standard one. It keeps that like community sentiment of excitement about being able to, the kind of excitement that you get from like a minting process, or I like to compare to like getting a pack of Pokemon cards, where
Hmm.
it's literally, it looks like a pack in terms of its digital form. You receive it, you get to open it up, and then the NFT is revealed. It does use Hedera's random number. There's a random number generator that's built into the Hedera network as like a call that can be made through the SDK. It utilizes some of the exciting and innovative aspects of the Hedera network itself. And then it creates this business model that I think is one of the most sustainable business models for an NFT project that I've seen that is super innovative and unique, whereby they don't have to, as a project, continue to be putting out more and more and more and more collections to keep things going, creating a certain degree of dilution in the market. They're basically able to, in the nicest way possible of saying it, recycle these NFTs of the same collections back through the ecosystem, which when you start to think about it that way, it's going to have this impact of raising the price of all of the NFTs. And so I think that has sort of reached an apex now, as we've seen over the last 4 or 5 days, where the volumes related to this project have continued to go up. I think it's $2 million in HBAR volume over the last 24 hours. And then when you look at these metrics relative to the NFT ecosystems on Base, Solana, I think Hedera with this collection is like number three or maybe number two. It's crazy. It's really cool to see.
Well, the Dead Pixels team, I interviewed them before the Forever Mint even came out, and they just knew that because they had been in that space, that one of the most exciting things to go along with NFTs is that mint process of not knowing what you're going to get. And I don't know where the floor price is now, maybe between 1 and 2,000 HBAR for these Dead Pixels. But then there's these gold, these ultra rare ones, and some other rare versions of it that are going for 30, 40, 50, 60,000 H bar, and you have the
Yeah.
chance to be able to draw one of those. So they knew that that was going to potentially resonate with NFT collectors. And what we're seeing now is that actually coming to fruition. That idea that they had, that innovation, actually working in practice. So, as you said, this is not just impressive within the Hedera ecosystem, which of course it's off the charts for us, but it's
Yeah.
actually competing with some of the top and other NFT projects out there. Go ahead.
I wonder and I hope to see adoption maybe of that mechanism in some way too across other projects because it's such a positions obviously their project, but also Hedera as sort of leading on the innovation front of things that you could do with NFTs. Maybe it's like a revitalization too of just the NFT ecosystem in general. You've seen a bit of a dip, I think, from its like absolute highs in I think it was 2021 or 2020. And so yeah, something super exciting to keep watching.
Yeah, and of course, I have my own little NFT project with the Bulbarians, and once you get to that point where you're fully minted, I could see doing something along those lines as well. They've shown us how you can revitalize an NFT project like that, so it's really impressive. I wish them the best of luck. I've had a blast watching them so far. Yeah, this is the kind of innovation that we want to see. But we're going to shift gears again now. We're going to get into some things you saw around Grayscale. What do you have for us on that?
Yeah, so word across the ecosystem from what we're seeing is Grayscale filing an ETF for Hedera and Cardano or HBAR and ADA digital assets in Delaware. It's kind of opaque in terms of sort of what the implications are related to that in terms of timing, or if those ETFs, when they actually go live, being able to be traded. Anytime I've sort of looked into and researched, the availability of ETFs for any other crypto assets, I think besides Ethereum and obviously Bitcoin, there's a huge appetite for any of these other altcoins to be ETF'd and made available. I know we've seen some delays with regards to approvals related to ETFs for some of these other altcoins, but I think, when you start to see more and more organizations like Grayscale or like Canary start to come through and file these ETFs, and that backlog gets built. At a certain point, some of this stuff is going to be approved, and it'll be interesting to see what that actual impact has on the rest of the space. Yeah.
Yeah, there's no question about it. I do think that the US altcoin ETFs have the potential to cause one of those alt seasons like we've seen in the past. I think there's going to be a lot of excitement around it, but you never know what's going to happen. So HBAR has the one from Canary Capital, this one from Grayscale. This was another step on Grayscale's roadmap to actually being able to get this product to market. I'm excited about it. I think it's good to see in general. I think that there's a lot of people out there that wouldn't have bought Spot, wouldn't have gone and gotten a Coinbase or a Binance account, but if it shows up in their brokerage, they're certainly willing to then buy when it is that much easier. And I think that for a lot of that style of investors, HBAR, the Hedera network, the things that are being built on it could resonate a lot more with them. So we're going to see what comes out from it here in the weeks and months to come. But the other thing, and I already covered this in my show on Friday, but there was also rumors that BlackRock was going to be getting an HBAR ETF was looking to file an HBAR ETF because of some movements that people saw on Archax. And I did contact the team over there at Archax. I asked them if that was the case. And it was actually, from the sounds of it, just fund creation for their BlackRock funds, which are built on Hedera, but not for an ETF specifically. So I just wanted to clarify that as well. Before we move on to yields, Brady, is there anything else you wanted to cover as far as news goes?
Related to the BlackRock one, you basically covered this, I think, in the full investigation that you
Mm-hmm.
did related to that. But I did the same thing and started to dig in, and it was like, well, where's the source
Sure.
of this coming from? And in digging back, yeah, it does look like it was a bit of a rumor that spun up pretty quickly. But it is funny though, seeing how, a post on X of a small rumor within 24, 48 hours results in 20 articles created from
I'm
news sources.
sorry, citing a post on X shouldn't happen in crypto media. You should not be
No.
going to a crypto media site and them, having a quote of a tweet that showed up. And it was so
Yeah,
easy. I mean, of course, you and I probably both have relationships with the Archax team or contacts or whatever. So we can just kind of reach out. But it's not like it's that hard to follow up on these things, right?
right. You would think and hope, but yeah, still media I think is a bit nascent in this industry. And then there's the idea of like if one of these publications, misses out on a news story that could have been breaking where they would have been first to it. I get that aspect of it, but like got to do some research. I think there's a lacking a little bit.
Oh, when I say my due diligence took all of about 5 minutes. That's all it took. Like I had an answer within 5 minutes. They were like, it's nothing as sexy as what you're seeing on X. This is what happened. And of course, it is great that those funds are on Hedera, but not as big of a deal as it was made out to be. And the thing is you don't have to make stuff up about Hedera. There's plenty of exciting stuff going on, from these stocks that are going to get minted on Hedera to Accenture and Nvidia doing stuff with Hedera. Just go down the line. I mean, there's plenty of good stuff in there that you can dig up and talk about. You don't have to necessarily just go to things people make up on the internet. All right, let's dive into some of the yield opportunities that we're seeing on Hedera. All right, starting off with SaucerSwap, we're going to look at some of these yields that we have on V1. And V1 is, of course, as I've mentioned before, giving you the whole span of price ratios between these two assets. We're going to start off with HBAR Dino, which is at 40%. Sauce HBAR is at 14%. USDC HBAR at 22%. HBAR Karate at 81%. So that one's pretty high compared to what we saw in years past. HBAR X Sauce is at 10%. HBAR Pack at 15%. HBAR Da Vinci at 35%. And finally, HBAR Gib at 16%. And just to explain again how I picked these out, first I go to all of the assets that have the most liquidity. If there's some in there that I don't think are very exciting, so things like HBAR and HBAR X, or two stable coins that are together or things along those lines, I'll go to the ones that have the highest APRs and I'll throw those in as well. And I do that on V2 as well, and we'll go over to V2. So V2 is for concentrated liquidity. So for comparing from week to week, because we don't know how tight that band is, it might not be as good, but it is good to give us an idea of what's going on in those concentrated liquidity pools. So HBAR USDC on V2 is at 84%. Wrapped ETH USDC is at 111%. Sauce HBAR at 12%. HBAR Bonzo at 12%. HBAR Pack at 96%. HBAR Dovu is at 48%. Link HBAR, so this is another wrapped product, is at 78%. And finally, wrapped Bitcoin USDC is at 71%. Now, one thing when you're providing liquidity for those pairs, you do have the risk of impermanent loss. There's plenty of resources out there if you want to find out exactly what impermanent loss is. But if you don't want to take that risk and you only want to supply one asset, the best place to do that is Bonzo. Right now, for supplying HBAR, you're getting about 0.5%, USDC at 3.6%. For Bonzo, you're getting one of the best returns. You have over 9%. Sauce is at about 0.5%. Karate at 0.4%. Grelf gives you an extra kicker, so you're getting about 2.5% for that. And the native token for the Kabila NFT Launchpad and Marketplace is giving you just about 5%. All right, Brady, before we jump into your metrics, is there anything when it comes to yields that you want to cover?
Yeah, so for the Bonzo Finance protocol in particular, we mentioned these parameters that exist for each of the asset markets. And I think one thing that's important is just around education. Some of this stuff can be a bit complex or maybe a bit opaque for users to really understand the mechanisms behind how these lending protocols function. And so, using the USDC market here just as a quick example to try to explain some of these parameters, these markets are based on utilization of the pool, which means what percentage of the total supply in the pool is actively being borrowed by users. And this is on the global, sort of a global scale for the market. And there's three sort of parameters that I think are most important to think about with regards to the interest rate models. And it's slope one, slope two, and optimal utilization. And what we'll start with optimal utilization. What that is it's the point at which utilization of the pool as a percentage splits the interest rate model for anything prior to that optimal utilization point and the interest rate model after that optimal utilization point. So before being slope one, which as you can see here, slope one is a bit more of a linear progression, which dictates the APYs for supplying and borrowing. And then after is a more exponential rate. And the reason that this is a more exponential rate is because it is of greater incentive for users participating in that pool or observing that pool to supply more assets because the APY to supply is higher, or repay loans because the borrow APY is higher as well. And so as the true utilization of the pool or percentage of the assets in the pool are increasing up to that optimal utilization rate, that is sort of the inflection point at which things more dramatically change. The other thing to observe too is when you have supply and borrow caps for an asset market, while they're not displayed on this graphic, the supply cap caps the ability to supply more assets or tokens into the pool based on a fixed token amount. And so I think one of the things that is being performed by this independent risk steward, as cited before, is trying to create the most efficient markets within the protocol that allow for these interest rates to be able to experience the full range of their mobility. So all the way through to the end of slope two, whereby you could have a supply cap maybe that is more capable and a borrow cap that's more capable of allowing the market to achieve sort of an efficiency. Today, with the supply cap, I think being set in the state that it is for certain markets, it prevents the ability for utilization to surpass a certain threshold, maybe not even reaching the optimal utilization point. And in the most sort of efficient type of structure, it would be one by which, you could get to the optimal utilization. So, these things will evolve over time for the Bonzo Finance protocol, especially with the onboarding again of this independent risk steward and creating more market efficiencies, for these markets in the protocol.
So there's kind of two mechanisms to get things back in line. You have you're incentivizing people with those exponential rates to either pay back their loans or supply more liquidity, but you also have those borrow caps that are going to be a hard stop, so you can't borrow more of those tokens once it hits a certain limit, right?
Yep, and then borrow caps and supply caps as well. Yeah,
Okay. All right, makes perfect sense. So, all right, let's jump into some of the metrics to show the health of the Hedera DeFi space.
let's do it. All right, so starting with DeFi ecosystem health, DeFi TVL, which is inclusive of liquid staking and also borrows, is at $275.52 million in the US dollar denominated value. We're seeing a chart that probably looks very similar to just HBAR price. As the price of assets rise within the ecosystem, that US dollar denominated value for TVL is going to rise with it. Also, because some of the price changes trickle down from HBAR into the other ecosystem assets. I'm still kind of going sideways with regards to USD denominated value, with the HBAR denominated value of TVL also going sideways, but a little bit of an uptick over the last month or so. So something that we'll keep watching in terms of TVL. And I think, we talked about this last time with regards to dormant assets in the ecosystem, maybe sitting in wallets. Folks are, possibly intimidated to a degree around utilization of some of the DeFi protocols that exist in the ecosystem, especially when there can be sort of more complex nuance with regards to usage. So SaucerSwap concentrated liquidity pools. With the introduction of vaults through Bonzo, I think that is going to probably help in terms of making it more accessible for folks to participate with some of those dormant assets within DeFi and have those assets be constituted as TVL. There's also auto pools in SaucerSwap today that are operated as the Itchy protocol,
Hmm.
For concentrated liquidity management, that's single-sided deposit. So being able to, when starting a position within SaucerSwap V2 for certain pools that have the auto pool label, being able to deposit only one side of that pool in a single asset and having those AG pools automatically manage what was deposited there between the ratio of the two assets. There's definitely some nuances there, and it's worth sort of reading up and understanding, obviously, what the risks are and also the mechanisms by which auto pools work. So, that documentation is available in SaucerSwap. And then as Bonzo rolls out vaults as well, lots of education and documentation related to how that functionality works.
All right, so let's move on to the DEX volumes.
Awesome. So for DEX volume, again, US dollar denominated values and HBAR denominated value. We're halfway through the month now, sitting at August 17th. We saw one of the best months in terms of DEX volume in July that we've seen in the prior 4 months to that. We're sitting almost exactly like slightly above half of the volume that we saw last month. So my guess is we'll close out August with a similar amount of volume, if not more. Kind of depends on some of the macroeconomic trends related to that. And then in HBAR denominated value, same thing. July was one of the highest months that we saw in terms of DEX volume from the prior 4 months, and also on track to probably hit or potentially beat volumes that we saw in July.
Yeah, well, things are looking pretty good as they are, and considering normally this is the time when we would see the summer doldrums, things should start to heat up once we hit the fall. What are things looking like on the stablecoin front?
Yeah, so for stablecoins, we break out these metrics into two separate ones. So there's stablecoin TVL. Again, Hedera native USDC is sort of the key stablecoin asset that's on the network that has received the most focus, has the most amount of liquidity. TVL for stablecoins, Hedera native USDC, sitting at about $20.36 million. So that's Hedera native USDC locked up primarily in Bonzo Finance lend, and then also on SaucerSwap. The metric from our previous DeFi corner was around 17. So we are seeing this continue to go up. I think with the changes also that were introduced on the Bonzo Finance side from that independent risk steward and that change memo proposal, some of the caps and the interest rate model adjustments have been made. And usually there's a delay, I think, from making changes to parameters for a market within a lending protocol and then any realization of the behavioral change by the market itself. But what those parameter changes allowed for is more borrowing to take place, which enables the ability for more supply to come in as well. Typically, they kind of go hand in hand as the borrowing goes up. And it becomes more appetizing to be able to supply. You start to see more supply. It's kind of a ping pong effect. So, yeah, I can't make any promises with regards to that. We don't know how the market's going to behave, obviously, but it does open the door for that to happen.
Yeah, and as we said, this is probably the most important metric when it comes to stablecoins. What are we looking at as far as total liquidity?
Yeah, so for total stablecoin liquidity, again, Hedera native USDC, it's sitting at about $93 million. We've talked, we've been on a roller coaster ride. I think every DeFi corner, it's something new with regards to this metric. It goes up, it goes down, it goes sideways. We've seen two spikes over the last year, pretty much. Dropped back down towards the end of July. Now we're back up again to 93 million. Clearly institutional sort of usage and utility here. We cited this last time too. I think really the best metric to be looking at that has been the most stable and most indicative of true utility and value is that TVL metric. That has slowly increased over time, but we've seen multiples of increases with regards to TVL of Hedera native USDC, whereas the circulating supply of Hedera native USDC just on the network in general is changing pretty dramatically.
All right, and finally, what about staking?
Yeah, so two forms of staking that exist within the Hedera ecosystem. Liquid staking through Stater Labs with HBAR X. Effectively, it's locking up HBAR and receiving a interest-bearing HBAR X liquid staking asset that's sitting at 4.32%. And then the native staking APY for the network, basically staking an account with HBAR in it to nodes on the network, validator nodes, at about 0.026%. Still pretty relatively low.
Yeah, no, that, and I'm going to have an opportunity here to ask some of the higher ups within the Hedera ecosystem some of their thoughts around this. So I'm looking forward to that. Brady, that's pretty much all we have. Is there anything else you'd like to pass on?
Nothing else on my end. Excited to continue to see things heat up, I think, over the next few months. Like you said, as it starts getting into the fall season, I think,
Hmm.
as we've seen historically, that um, post summertime is a bit more exciting. So, looking forward to the next DeFi corner.
Yeah, one of the things that I'm expecting is now that we're seeing, NFTs starting to take off, I could see things becoming a little bit more cyclical as far as things going through phases. So it might be utility coins or gaming coins or meme coins or NFTs again. I do expect that as the entire space starts to heat up, starting to see those kind of phases as we go through the different kinds of tokens that are available on the Hedera network. But Brady, again, that's pretty much all we have. Thanks for hopping on, and we'll see you in a couple weeks.
Awesome. Thanks so much.